Hello ladies and gentlemen, welcome back to another edition of Capital Concepts. I'm Jeff Schuler, Director of Research here at Spiker Consulting in our training room once again. And it's been about a week, but oh my goodness, what an incredible week. Now, before our last program, I talked about the opportunities that we had, talked about the pullback that we had in the marketplace, especially on the radio show, and my goodness, did everything come out as I expected it. But something happened. Something happened. Extraordinary something happened. A complete shift in the metrics on why we want to own, why we need to own precious metals. Right now, it's not so much about making money as it is about survival. We have to own it. Here's why. Up until recently, we had a couple of major players. We had China involved in massive purchases of gold, and we had Dubai leading the Arab world in massive purchases of gold. Now, it was my contention that both China and the Arab worlds were looking to back their currencies with gold at some point in the near term. The Arabs using Dubai as their front centerpiece and the Dubai Exchange to pull in gold and form the basis for the Khaliji. It means of the Gulf. And it looked like that they're about to launch it sometime next year. 2010 is their launch date. And obviously China, we don't know when they're going to launch or say that they're going to begin to back their currency with gold. We know that they're running publicly about 2%, but I tell you this, I know the secondary market. I know it very well. And from what I'm seeing, the Chinese are out there buying every ounce they can. And I mean in size with a capital S. We're running into a shortage. I mentioned this a couple weeks ago, the first time in decades that we're running into a shortage. Russia, interestingly enough, is starting to talk about becoming a buyer instead of a seller. Now, they increased their selling by about 20 to 25% over the previous year, while they curtailed their production of palladium, which is why one of the reasons why we're a major buyer of palladium. But now they're talking about actually buying gold on the open market. And there's a little rumor going around. And right now, it's just a rumor. I haven't been able to fully validate it. But there's a rumor that says the Arab League, China, and Russia may just be putting together an economic bloc of their own, issuing a currency, a new currency, that will be backed by a pool of gold, silver, and crude oil. Now, given the oil production of Dubai, the Arab League, and Russia, along with the metals production of Russia and China, makes a bit of sense. But then, out of the blue, India, the question mark, India comes in and buys 200 metric tons of gold from the IMF at an average price of $1,045. That means they paid a little more than that, for some a little less, but $1,045. Now, what that tells me is that the new metric, the driver for gold today, is not price, it's need. Because the rumor of this new currency is that India wants in. And then to see, after I started hearing this rumor, that they come out and they buy 200 metric tons, not an investor, the central bank. 200 metric tons at $1,045. Validating the price levels and beyond. Here's the amazing thing about it. India has always been a major consumer of gold, one of the world's top consumers of gold, but it's for religious purposes. It's for weddings and other festivities, and they buy gold for gifts. That's why they buy so much of it. And they're consumers. When gold got around 1,000, sales in India began to drop because of price. They bought as much in monetary terms, but not as much in actual terms. Now the central bank comes up and buys 200 metric tons. That's the first purchase that central bank's made in many, 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 many years, propping them up to the number 10 central bank buy holding of gold. If this market is driven by need, which we're now seeing it is, that changes everything. That means price is not a factor, and we can see tremendously higher prices. It's very similar now to the oil market. Crude oil is driven by need, not by price. The buyers of crude oil buy the metric ton on long-term production deals, buy because of need, not because of price. What I'm seeing and what I'm hearing on the secondary market, what can I get, how much can I get, and for how long can I get it? Price is not coming up in the discussion. Not until the very end when the contracts are being finalized and price is just being done based on a London spot and London fix. And a discount to that. But what they're paying is not the important thing. The important thing is that they're getting it, or that they can't get what they're getting, or that they're looking for it, but the driver is not price. The driver's need. And whenever you've got need over price, you've got higher prices. And I'm telling you, ladies and gentlemen, if you're an investor and you don't see this the way they see this, that you don't see that you need to own it, you are making a critical error that could cost you everything. A prudent investor must look at this and say, even if a portion of it is accurate, even if this rumor doesn't come about, if it's possible, if the Khaliji is possible, if backing Chinese currencies is possible, if this economic bloc that's being put together is possible, if it's plausible, because India steps up to the plate and picks up 200 metric tons at an average price of $1,045. How much insurance do I need to take out? How much do I need to get for myself to protect myself? No longer is this a matter of let's make 25 or 30%, or let's double our money. This is a matter of economic survival. Others see it. Others see it. I see it. The question is, do you see it? We can help you get involved on an investment level directly in the metal itself. We can help you enhance your purchase and maximize your returns. Limit your exposure at the same time. The numbers to call, the way to get involved are right down here. But ladies and gentlemen, you've got to take action. If you own gold, silver, palladium, platinum, crude oil, time is your ally. Time's on your side. If you don't, it's your enemy. It's your adversary. And you don't have the luxury of time. Ladies and gentlemen, take action. Now, I hope this bit of Capital Concepts means something to you. I hope it opens your eyes to where you will begin to take action, learn more, get involved, and protect yourself. Because again, this is not a matter of price, it's a matter of need. I hope you've enjoyed it. I hope you have an absolutely fantastic day. And until the next time we get to chat, may God bless you all.